What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I did a video months ago about AGNC, really good monthly dividend stock. I changed my mind. I'm selling it, getting rid of it. I'm never going to touch it again with a 10-foot pole. You guys that have invested in AGNC, I'm going to show you why you should probably avoid this stock. Really, I've seen on forums, dividend stock forums, people are all about AGNC. I'm going to show you two better monthly dividend stocks that are actually cheaper and they increase their dividends, unlike AGNC. So we're going to do a stock and dividend analysis video right now. So since inception, AGNC has decreased its price per share. It is just slowly going down. It's going down the tubes. Okay, so that's strike one. That is an issue that I have with this rate. So this is a high yield dividend stock, and you got to be careful with high yield dividend stocks, especially when you look at their dividend history, which we'll go over in a second. But here's the thing, okay? Sure, it's down and it's $18.08. Okay, it's down for the past 5 years. Okay, sure, a pandemic happened, great, but it's not going up. Okay, it's going down. So I don't like this at all, the style of REITs. I'm going to show you one that's the same style. It's MREIT. Okay, I'm going to show you one that is similar, but even better real quick. That is increasing its dividend and that I will be long on. That stock would be Arbor Realty Trust. This is a stock that has increased its dividend over time. It has increased its price per share. It is actually a stock that I would consider putting in a traditional or Roth IRA because it is increasing its price per share. Sure, it hit a nosedive, but look at this. The gap is changing. It's slowly rebounding since the recession. It's going up and it's continuing to go up. So that's one thing that I really like about Arbor Realty Trust. It took a nosedive because of the recession that happened, but it's slowly returning back to glory. Okay, so that's something that's very attractive. I have been doing videos all the time on stocks. I have an old video on Arbor Realty Trust. I'll probably make a new one. But AGNC, I am not very happy with these guys. And I'm going to show you its dividend history. And then we'll look a little bit into a little bit more of AGNC. But let's check out its dividend history. Okay, the PE ratio is 3.29. The dividend yield is 8.27%. Annual dividend yield of $1.44. I got a problem right here. So 140. First of all, it was a quarterly. And all of a sudden they wanted to change to monthly, 18 cents. Okay, 18 cents, 16, 12. So it's dropping. So it's decreasing its price per share. It's decreasing its dividend. So that's not very attractive for a dividend investor. When I invest in stocks, especially monthly dividend stocks, I want them to increase their price per share. Okay? 16 cents to 12 cents is not very attractive. Okay? The dividend yield is 8.27. So anytime you see something above 5, 6, 7, got to be careful. You got to be careful for a yield trap. And so far this is appearing to be a yield trap. So I'll show you a video on Sunday, the changes that I made to my M1 Finance dividend portfolio and why one stock was a little bit above 5% and had a better dividend, but this one is decreasing its dividend. Okay. And I'll show you another stock that is decreasing its dividend. I spent like a little bit of dollars on it. I'll probably get rid of that one too because I don't like it either. So here's another one that I'm going to show you that's a little bit of a yield trap, and it's just not very attractive. So I'm going to jump to that one right now. I'll just do its dividend history. The Prospect Capital is another one. It's a business development company, PE ratio 3.45, annual dividend of 72 cents, dividend yield of 9.45%. Ooh, 8 cents, 6 cents, 6 cents right now. This is decreasing its dividend. Now, I do have some shares in it. Don't get me wrong. I'm not going to attack these guys completely yet because they're a business development company. They have standards that they do. They have to pay X amount of dollars back to investors, or else they will have to pay a penalty. This one is a little bit of a yield trap. I'll correct myself if I said something before. I'm not going to sell this one yet, but I need to be watching this one because look at this. 4, 10, 8, 6. You got to be careful with those yield traps. So, it's right around $8. It may rebound, but with AGNC, it's not very consistent to where I like it. So I'm going to show you. So keep an eye on Prospect. I'm going to hold on to it for a little bit. I don't know if I'm going to be long in it. I'm getting rid of AGNC. Let me show you two better monthly dividend stocks that are much better than AGNC. So this is what's important about dividend stocks. I did some videos on these, and I'm going to continue to buy more shares of these stocks. And I just did buy one of these stocks today after I sold one stock. So really excited to just do a real quick stock and dividend analysis. So let's check these two stocks out. So that stock would be Stag Industrial Complex, Stag Industrial Incorporated. So they, are doing pretty decent against the S&P. Past 5 years, they're in line with the S&P. AGNC has taken a huge nosedive. Now, it's a little bit more expensive than AGNC, but it's well diversified. As I will go to their website real quick and do a quick review on them. So $35.66. This is a good stock that is growing and is rebounding very well. Okay, sure, it's not doing well against the S&P, but I like that because it's increasing its dividend, which I'll show you shortly, and it's not too expensive. The compound interest can kick in. It's slowly increasing its dividend too. So I really like a few things about Stag Industrial Complex. So I'm going to go to their website real quick and discuss Stag Industrial Complex. So Stag, first of all, they're a specialized real estate investment trust that they're in 39 states, 494 buildings. Okay, they are increasing their dividend. Okay, so they're basically an industrial type, single tenant industrial properties. So this is pretty nice. So it's amazing how these guys have done. Let me just show you this real quick. So here's some of their properties, like what they kind of focus on. I'm from Ohio, so they have a distribution warehouses. They're doing warehouses, manufacturing. Okay, Columbus is actually booming in Ohio. People are moving. I'm from Ohio. People are leaving the area and just going to Columbus like crazy. So there's one in Cleveland, Youngstown. So these are kind of like the blue collar areas, the big cities, Youngstown. Some of these areas are kind of like a little bit of the Rust Belt area, but this is pretty nice, okay, with what they're doing. Here's just my state of Ohio. Let's just do one more quick one. So when you look in rates, you need to know what you're getting yourself into. Let's just do Texas. Okay, here's El Paso. Distribution warehouses. I mean, that's a ton. Okay. So distribution warehouses aren't going anywhere. It doesn't matter if it's a recession or a pandemic, they're still going to do well. Okay. Now I'm going to show you its dividend history, which I really like about Stag. This is what I like about them: a 4.2% dividend yield, annual dividend of 145, PE ratio 34.62. This is why I bought this today. I sold one stock. I'll go over that on Sunday with M1 Finance, some changes I made. But look at this. Okay, it's slowly increasing its dividend. Not too fast, but it's getting up there. 12 cents. And it's eventually going to go to 13. And it's going to go to 14. It's going to go to 15. So it's slowly going to go up there. So how fast? What was the rate? Let's just say every 2 years, 3 years. But they're going to get more buildings, so it's going to grow a lot faster too with appreciation. So one thing that I like is they're just getting bigger. They're kind of a new kid on the block, but they're still doing well. I mean, look at this. 2013. Okay, sure, 30 cents starting off, but 2013 to 2021, they're up there. So I like that. I really do like that. Revenue wise, they're doing well. Okay. AGNC is a little shaky. So, it's not very attractive with their revenue. I'm going to show you one more monthly dividend stock. I own this one as well. I'm going to continue to reinvest the dividends. I'm going to try to buy more in my M1 Finance portfolio because I really think it's a great monthly dividend stock. It's very specialized and it yields a very nice dividend. So we're going to check that one out. So we got a stock that was beating the S&P at one point, but it's just running circles around AGNC. Look at the past 5 years. Okay. Now it looks like it took a hit. Okay. Looks like it took a hit. But if it wasn't for this little pandemic right here, it would be in good shape. But it's a great buy because you look at them since inception. Okay. These guys are a monthly dividend stock. They are a specialized real estate investment trust, which I'm going to show you in a second. So these guys are basically, they're a senior housing and healthcare properties. So basically, they're a very specialized real estate investment trust that look at assisted living and skilled nursing facilities. So I said in my previous lecture I did on here, one of the things about assisted living and skilled nursing is unfortunately people are getting sicker and they're getting older. There's a rise in diabetes. There's a rise in congestive heart failure and heart issues. The baby boomers are retiring. And we're seeing sicker people in the hospital. It's not just, well, you come in with chest pain. You got chest pain, you got diabetes, you have a foot ulcer. Don't forget amputations with diabetics, okay? So these people that get their feet chopped off because of diabetes and being non-compliant, where do you think they're going? Assisted living or skilled nursing facilities. So these are always busy. It's hard to sometimes to get people in assisted living or skilled nursing. One, because of insurance, and two, it's in demand. There's a lot of people that should not be at home, but are at home. They refuse to go to skilled rehab or assisted living, and they know that they will be a permanent resident. It's just how it is. People don't want to, they know what's coming. A lot of these people are non-compliant. Catches up with them. People are getting sicker. They're saying by 2050, right around my retirement age, which I hope, but I'm 35, but 1 in 3 they're saying is going to have type 2 diabetes, and 1 in 3 is going to be obese. That's terrible. And really, it might be even bigger than that, because I tell you what, the complacency in this country, people don't want to work. I mean, you guys that are watching this video, you want to learn how to invest. You want to, you watch people's videos because, you can enhance your philosophy on investing. Okay. You find good stocks out there. I mean, I post dividend stocks that that I buy or that I'm interested in, or ones that are hot right there. I mean, that's what I do. I mean, you wanna learn or enhance your skills to be the maximum to get to the maximum effect being an investor. I mean, this is why I decided I was empowered by a lot of you guys to actually make videos and show you exactly what I'm doing. I thought it was really cool, and it's kind of like a journey. But people with weight loss journeys and stuff, people just don't want to do it. I mean, it's sad, but the numbers are going up, and it's very. I mean, it's a shame. I want people to get better, but there's just a rise in sicker people. So this is going to be in demand. So I'm going to show you the dividend history of LTC stock. Okay, so you saw in the past 5 years, like AGNC's up there. Well, guess what? Look at LTC Properties, 15 cents, 17 cents, 18, 19, 19 cents. It's going to be 20 eventually. The dividend yield of 5.83%. How do you say no to that? Okay, PE ratio 34.41, annual dividend 228. How do you say no to a monthly dividend stock that has increased its dividend, and it's going to happen soon, where it's going to get to 20 cents? May not be this year because of the pandemic, but it's going to get there. Very good traditional Roth IRA. I mean, the thing with AGNC that's so unattractive, okay? One, it's decreasing its dividend. Two, I mean, would you want that in a traditional Roth IRA? You're like losing money. Okay. Three, it's, the M rates are not too appetizing. They usually lose money in the long run. Four, it's it's almost like a yield trap. Okay, so a future yield trap. And five, you got to do your research on this stock. You really need to look into it. It's a no-brainer with LTC and Stag. You just look at its dividend history on NASDAQ, and you look at its stock history, and you think it's in demand. Are the M rates really in demand? No. Is it a good business model? No. Arbor Realty Trust is a good business model. That's why they're increasing their price per share. Unfortunately, they distribute a quarterly dividend, but they're increasing their dividends, and that's one stock I am long on. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a great weekend. I'm going to try to post the video Sunday night. You guys take care and have a good one.